From FXEmpire, this is Chris taking a look at the natural gas markets. Natural gas markets have shown themselves to be somewhat hesitant to break out above the previous resistance barrier right around $3.33. And that does make a certain amount of sense because this is all based on one storm. Now, nat gas can continue to go higher. I'm not saying that. But what I am saying is that it's only a matter of time before we run out of momentum. When that happens, natural gas markets will slam straight back down. We are essentially at the top of the overall consolidation range that I think we probably hang out in most of the year. The market breaking back below the $3 level would probably send traders back in to start shorting again, perhaps driving natural gas down to the $2.70 level, maybe even $2.50 after that. Natural gas supplies are plentiful, and even though we're going to get a big draw on natural gas supplies over the next several days, the reality is that the futures market is already pricing in February. We're really not that far from spring at this point when it comes to pricing. So while we may get a spike or two along the way, the winter has been a huge bust for natural gas. And unless we see something drastic happen meteorologically, it's just really difficult to imagine that natural gas is going to take off, despite the fact that everything was lined up for it to happen this year. Lack of European supply doesn't seem to be draining the American supply, and therefore the price that you see, which is based on the U.S. contract, remains somewhat suppressed.